Hello everyone, we would like to introduce the Chart Guys' newest course, Essential Candlesticks and the Patterns that they create. This is something that I, 9 years into my trading journey, take for granted. I look at a chart and I can instantly, subconsciously know what the candlestick shapes are telling me, the patterns that they are creating, and the market psychology that's going on behind the scenes to create those candlestick shapes. Obviously, I had to learn this at some point, and it was literally step number 1 of my technical analysis education journey was understanding what these candlestick shapes are telling us. So after going through this 12-hour course, you'll be able to understand why candlesticks are essential for trading success, develop your own ability to observe and react to the market trends and changes, develop an understanding of market psychology and how this phenomenon influences price action, as well as a whole bunch more. I'm going to link this website in the description of this video so you can check out more information for yourself. We've got examples of the modules and we break down exactly how this course is compiled, and essentially what it is a big chunk of book learning. So it's going to break down what these patterns are telling us: 2 candlestick bullish patterns, 3 candlestick bullish patterns, 2 candlestick bearish patterns, so on and so forth. Some live examples of those patterns playing out, and then tying it all together as to how we can use understanding these patterns to benefit our trading. My partner, Chart Guys Jason, goes through the meat of this course, breaking down all these individual patterns. I personally chime in with more abstract psychological topics of discussion, the art of observation, the psychology of a candle, and things of that nature. But we look forward to you checking this course out, and we appreciate your support as always. Have a great rest of your day. Hey everyone, doing some late night charting. So pretty much yesterday and today are the exact same on SPY, with a double bottom by 4 pennies and a double top by 10 pennies. So we're going to be looking for a break of this range tomorrow. If we get a bear break, we're going to look for the daily higher low compared to 261.79. We'll have to see what consolidation looks like and what the volume behind it looks like, if we get it. And if we don't, then the bulls are going to see continuation and a lack of resistance where we currently stand until we get to the upper 270s. I personally entered my first scale in of SPXS to begin hedging my parents' long-term portfolio, and I will look to add, depending on how quickly we proceed bullish from here, I will look to add around 277 and again around 280, 281 area, but that is going to fluctuate in terms of the data that I get every day and what it looks like. The faster we run up, the more aggressive I'm going to be scaling into my hedge, and if we stair step up, I'm going to be a lot more patient. So one of potentially 3 positions here so far. IWM, pretty much the same thing. We did get a bear break by 14 cents, but no follow through for those bears, and it's still a potential bull flag at this point. And on the daily time frame, 145.37 is the support the bulls need to hold, and as long as consolidation continues the way it has, we are setting up for the potential of a bull flag. That is a daily bull flag, and it's going to be up to the bears to give us some kind of red candlestick in order for it not to be the case. And I should say a couple red candlesticks for it not to be the case. QQQ on the daily did get continuation with a little higher high, but pretty much the opposite of IWM. Slightly higher high, but not much follow through. Bulls are still in complete control with every day a higher low for the last 6 days in a row. 160.99 is our daily higher low of support. If we break 169.75 tomorrow, we will lose the pattern of daily higher lows 6 days in a row. So that's something to be watching. And again, if we continue in all of these names, we're in an area of a lack of resistance for the next % or 2. XLF. XLF, key support on the daily is 25.71. We saw a tight range today that did end up getting a bear break by 2 pennies, but essentially the same as everybody else. Not much going on, pretty much sideways trading. So for this to have any kind of meaningful pullback in this market to indicate weekly consolidation is coming, I need to see 2 things. I need to see the financial sector break 25.71. That's a very important level for me to see weekly consolidation begin in that sector. And we'll look at oil here. That's the other thing that I'm going to be watching. And I need both of those things to happen. So looking at VIX, we pretty much have an inside bar. 1504, 1509. So pretty much the same range as yesterday, similar to SPY. Have to see a bull break of 1587 and 1594 tomorrow to try and see this daily bounce take place. And a bear break would be 1504. So oil on the daily chart responded bullish to the inventory report today and gave us a decent bullish candlestick to try and continue strong. The most important level on oil for me right now is 51.31. If we establish this higher low and then see continuation over 55.72, my most important level will then up to 52.85, but we haven't bounced enough off of this level for me to be considering it a very strong support level. Obviously, the bounce we had off 51.31 established it as a clear support level. So what I need to see is the financial sector break that key support level that I just highlighted, and I need to see oil break its key support level, indicating that both are seeing their weekly consolidation in order for the S&P 500 to pull back. Same thing with QQQ. Obviously, we need to see tech sector weakness for any weekly consolidation in the market as a whole, but we don't have any clear level near QQQ, and we know we're going to form a higher low on the first pullback that we see. So it's not like we're going to break any key support on QQQ anytime soon, whereas for XLF, one solid bear day, and we could take out those daily support levels. So that's just letting you all know what I'm watching. Looking at oil on the shorter term time frames, trying to change the momentum back in favor of the bulls. And we are looking at a break of the 4-hour lower highs, but we need the higher low and higher high to confirm the trend change. Right now, still healthy consolidation in after hours. In natural gas, still a potential bear flag on the daily time frame. We have a 4-hour sideways channel, and if we do not break this before the inventory report, we'll certainly look to break it during that inventory report, which is in about 12 hours from now. But key support is 2692, key resistance is 2768, and we can absolutely see another leg down for the bears and confirm this daily bear flag. The daily RSI at this point is 32 and not oversold. So that's where we stand. The bulls are still in full control, and we have criteria of what to be watching for that to shift and to change, but there's no sign of that at this point. It's been a very slow couple of days, a very sleepy couple of days if you've been day trading, not a ton going on. And it really reminds me of the market back after the election, where we would just see slow and steady green and a lack of volatility and just really consistent slow movement upwards. So we'll see if that changes, but until then, bulls are driving the ship. Hope you have a good night. We'll see you soon. Going to be traveling the next couple of days. Not sure how consistent the videos will remain, but I'll do them when I can.